Here we go again with talks of another potential trade war with China. What's up everybody, I am Jasprit Singh and welcome to the Minority Mindset. Is it just me or can people not stop talking about China? First, China was on the news because of a US and China trade war. Then came the Hong Kong protests. After that came this virus. And now we're going back to the beginning by talking about another potential trade war between the United States and China. This is important for you to understand because even if a trade war doesn't directly affect you, it would indirectly affect you. A trade war means that doing business with China becomes more expensive. Oh, well, I only buy American. Well, American companies have a lot of exposure to China, and trade wars can affect your American investments too. That's why in this video, I want to go over trade wars and what's going on right now. So make sure you watch this video until the end, because at the end of this video, I'm going to be talking about how you can potentially capitalize on what's going on right now. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single weekend. Hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. A trade war on a very general level means that American companies will get fined for buying things from China. So when Nike or Apple import their iPhone or a pair of Jordans from China to sell to you, Nike or Apple will have to pay an extra tax or a fine to import these products from China. Psh, they can afford it. Sure, maybe they can. But there's no guarantee that they will, because when a company's costs are higher, they usually push these costs down to the consumer. So if Apple has to pay more money to produce the iPhone, and if Nike has to pay more money to make the Jordans, that means the cost of your iPhone and Jordans might go up. So are you telling me that fake Gucci is going to cost as much as real Gucci? The flip side of this trade deal is that when American farmers send their cotton and their soybeans to China, then China slaps a tax or a fine on our products. These fines and sanctions make it so that less people in the United States want to buy things from China, and less people in China want to buy things from the United States. No big deal though, right? I mean, there's a lot of countries in Asia and the world that want to do business with the United States, except right now, China is the biggest trading partner with the United States. In 2018, the United States exported or sold over $120 billion worth of goods to China. And in 2018, that same year, the United States imported or bought over $530 billion worth of goods from China. That's why a trade war between the United States and China can be such a big deal, because you risk losing out on your biggest customer and supplier. The Federal Reserve Bank actually went out and calculated the cost of this trade war. They said that in 2018, when the trade war started between the United States and China, that American companies lost about $1.7 trillion in market value because of this trade war. Here we are again in 2020, kind of like repeating history, because now we're talking about another potential trade war, and there are a couple things triggering what's going on right now. First, China has been talking about limiting some of Hong Kong's freedoms, which would make it more difficult for Hong Kong to do business with the United States. Second is this pandemic. President Trump has been very vocal about how he is not happy with China's response to this pandemic, which has led to countless Americans being killed and has led to trillions of dollars being lost. So as retaliation, the United States Senate passed a bill which would kick out Chinese companies off of the American stock exchanges. This way it's harder for Chinese companies to raise money from American investors. Then, kind of as an unpredicted move, this conflict pushed the United States to send more aid to African countries to help them with this pandemic. China has spent tons of money trying to commercialize countries in Africa, and they're actually the largest non-traditional lender in Africa. So China kind of wanted to be like that hero figure for countries in Africa by being the largest investor and I guess equity holder too. But this pandemic really hurt China's investment. That's when the United States started thinking, we can come in and take this investment away from China, and then we can come in and look like the heroes. So the United States pledged hundreds of millions of dollars to help different countries in Africa fight this pandemic, and they have pledged about 1,000 ventilators to send to South Africa. So this is kind of like the United States' non-direct way to take this investment away from China while looking like the hero. But now, after all these passive-aggressive moves, the United States took it one step further. On May 29th, 2020, President Donald Trump held a special press conference where he just bashed China. He talked about how China had been ripping off the United States for years. He talked about how they lied about this virus. And he talked about how China owes the United States. And then he walked off the stage without answering a single question. Interestingly, President Trump didn't mention tariffs in this particular speech, but he did talk about how he wanted fair and reciprocal treatment. He said he's terminating ties with the World Health Organization, or WHO, completely. He said he wants to work harder to delist Chinese companies off of our American stock exchanges. And he said he wants to eliminate certain exemptions that the United States would give Hong Kong to do business with them because of the way China is having influence on Hong Kong. So what does all this mean for you? Well, after a crazy 2018 and a crazy 2019 and an even crazier 2020, now companies are talking about moving their factories and manufacturing facilities out of China to other countries like India and Vietnam and other Southeast Asian countries. They just want less uncertainty and less worry about trade wars. I'll be talking more on how to capitalize about this in just a minute, but if you are invested in Chinese companies or Chinese ETFs, this is something you want to be aware of because it doesn't look like this issue is going to go away anytime soon. If you want to invest in stocks, you have to use a stock brokerage, and there are a ton of them out there, but I have linked for you a couple of our partner stock brokerages which are completely free for you to use in the description below. And while President Trump didn't talk about trade sanctions right now, I wouldn't rule them out just yet. If history is any indication of the future, the United States and China are gonna dance around with the United States throwing a couple fake punches, and then China is gonna do the same thing, and maybe somebody will land a punch. If that happens and a punch is landed, then we're gonna see the trade war start all over again, and we're gonna see companies get hurt, we're gonna see the stock market slow down, and we will see jobs get hurt all over again. And this is during a time when our economy is already slow. Before I get into how China is responding to the United States' actions, if you are interested in staying up to date in what's happening in the top finance and business news, well, that's why we created our free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are different from our financial education emails. China has already promised countermeasures, and they said that they will, quote, resolutely fight back. So you can expect more of this dancing around and kind of tossing these fake punches over the next weeks and months. We are in a weird phase right now because the United States and China, neither of them want to end the current trade deal that we have because it is making money for both countries. And at the same time, we are entering a worldwide recession, so the trade deal would hurt the economies of both countries even more. And on top of that, the United States is about to have a presidential election, and President Donald Trump is basing his re-election campaign on the strength of the economy and the stock market. So he's not going to want to see the economy get hurt right before an election. That's why I call it a dance. Like in 2019, the Chinese economy grew a lot faster than the United States expected, which is not good news when you're negotiating as the United States. But tariffs and a trade war would encourage American companies to leave China for other countries, and that would slow down the Chinese economy. That's why China keeps saying that the United States needs to stay out of the Chinese internal affairs. But again, this is something you want to keep your eye on because you want to look for the opportunity for investing in places where businesses are moving to. India is working to lure 1,000 companies from China. If that works, then that would mean that there's more businesses coming to India, which would help the Indian economy. And Vietnam has been a manufacturing hotspot recently for companies looking to leave China because they don't want to deal with these type of trade wars. You, as an investor who understands this and is paying attention to what's happening, can use this as an opportunity to invest into these emerging countries that are benefiting because of this trade conflict. Now, you can invest in ETFs, which are investment funds that give you exposure to countries like Vietnam or India, and anybody can do this off of their phone if you have $100 just by looking up ETFs in America from American stock exchanges that give you exposure to these emerging countries. Are you guaranteed to make money? No, of course not. Investing has risks, and you are never guaranteed to make money when you invest, and this has more risk than other typical investments because it's much harder to predict what's going to happen overseas, which is why you should never blindly listen to a random guy on YouTube. You calling me random? But this is what it means to find opportunity in a crisis. Most people get completely bogged down by the idea of a potential trade war, but there's always opportunity that comes with a crisis, and you just need to know where to look. Don't just go out and start blindly buying up emerging market ETFs because there's a chance that more countries are going to leave China. You need to pay attention to what's happening and make educated decisions. But again, if you do want to see a stock brokerage you can use, I have listed some of our free partner stock brokerages in the description, and I also have a free financial newsletter for you in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how dividend companies slashing their dividends can be a good thing for you, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.